you're wondering what's going on with mortgage rates, you come to the right channel, because here we not only talk about mortgage rates on a daily basis to give you basically the trends that we're seeing and the current rates, but also the economic data behind everything, like inflation, housing numbers, employment numbers, and everything else. So my name is Dan Frio. I do the rate update every day. I'm a mortgage broker in the United States. I can help you basically at this point in any state that you're in. Our goal here is to educate and inform you guys everything real estate, especially when it comes to the financing piece of the puzzle. So, well, let's get to it. Where are rates for today? And then what news is coming out or has come out already this morning that should make some major changes to this? So yesterday we had some economic data that wasn't so good. And I said, well, we're probably going to see rates go up at least 0.1 or more. Well, let's see how we did. So here's my newsletter. If you'd like to subscribe to that, it's down below and it's free. There's no cost, there's no catch, and I don't sell any of the data. So let's get on to it. Why you're here. Well, the reason you're here is for mortgage rates. Okay, so let me explain this to you. These are not my rates. These are not a single bank's rates. What happens is Mortgage News Daily, right here, they survey mortgage lenders all over the country, and this is what they come up with. They keep changing this darn format, and it's confusing me and confusing everybody, but this is the best place to go to just to see the trends. So what we talk about on a daily basis is this. And you might be saying, Dan, why do you use just Mortgage News Daily if that's not one lender's mortgage rates? Well, that's a great question. It's similar to the Dow Jones, is basically what I want to explain to everybody. What we watch here is, like, for example, if you watch the Dow Jones, if the Dow Jones is up, well, most likely your stock is up. Well, in this case, if rates are up, no matter what the rate is, you can correlate that with the rate that you've been quoted. Okay, so let's get to it. Let me explain this, how it's broken down. So right here, you see the rates all over the board, and this is where we closed yesterday. All right, we have not opened yet. They haven't gathered their data yet and posted it, but when they do, I usually post an updated report midday. So let's go through this format. They changed it up just a little bit. They did add a VA cell in here, which helps us. I don't know if they'll ever get to the USDA, but hopefully they'll get there. So let's go across here. The 30-year fixed rate's coming in right now at 5.47. It's up 0.11. Re-reference that as 11 basis points. Here's the 52-week high and low. You can see basically in almost every one of these cells, unfortunately, the 52-week low is about half of where we are now. Okay, so let's go continue across. We got the 15-year coming in at 4.82, up 4 basis points. The 30-year jumbo at 4.71, up 2 basis points. We have the 5-year ARM kind of bucking the trend there a little bit, nothing. It's flat at 4.48. We have FHA at 4.8, up 2 basis points. And then the 30-year VA, we finally have the VA. See how I say it correlates pretty darn close. It's 0.1 off. So we got the VA coming in at 4.9. Right down here shows you the 10-year chart. We're in uncharted territories. Right through here, the nice thing here is we have minimum, the trend line. It'll tell you if we're going really bad or if it's going to be a good day. Right now, we're teetering on the good. So let's see what's going on in the crystal ball. So what we watch is this right here. What this is basically the mortgage-backed security. It's the bond that trades on Wall Street that's yield is the biggest component of your mortgage rate. Okay, so it's not the federal funds rate. The Federal Reserve has nothing to do with this rate. It's this particular bond. It trades on Wall Street. You might even have it in your portfolio. So how this works, the best way to explain it is when this number here, right here, goes up, there's a positive, that means rates are getting better. So there's an inverse, what they call an inverse relationship with the price and mortgage rates. Okay, so when this goes up, mortgage rates go down. The higher this goes up, the more rates come down. You can see the chart below. We've had a dismal 6 month, but the last week or so, we've had a lot of green other than a little bit of a hiccup yesterday. Yesterday's event was, and I forgot to explain this, and somebody called me out on it, was the first day the Federal Reserve was trying to unload their balance sheet. And I'll do a video later this afternoon to explain all that and the repercussions that we might see because of that. So that's that part of things. Let's go to the economic news that will play a role in all of this. The first thing we have coming out is the payroll numbers. So private payrolls increased by just 128,000. I remember a long time ago, the Federal Reserve stepped in and said, you know what, we're not going to start raising rates until we see this jobs number hitting 1 million, yes, 1 million people a month for at least 3 to 4 consecutive months. well, that got thrown out with the bathwater. And I said that at that time. The Federal Reserve doesn't know what tomorrow's going to bring, let alone the following year, and the year after, and the year after. So I hope you get that part of it. So that wasn't very good news. On the housing market, though, we do have some good news. Finally, for the first time since June of 2019, we have more houses coming to the market. So the biggest detriment we have right now is just the supply. There's ample demand, but there's just not enough supply. That is starting to turn, right? So that's that part of it. The economic calendar for today is, as we've seen, we have the non-farm payroll numbers came in. The expectations were for 300,000, came in at 128, less than half. That's not good. Initial jobless claims, we had less jobless claims in less than where we were the previous month. So basically this chart right here tells us what the previous reading was, what the forecast was, and how well that forecast came out with the actual numbers here. And you can see they missed it in all these areas. Okay, so I'm really concerned also about the crude oil inventories, because this is a huge gauge of inflation. So that is the report for today. If you would, go to my community page. I'm starting a spin-off channel that's going to be basically educational. So we're trying to find a name for it, and you can help me choose that. So check out the community channel. You can vote on which name we're going to call that. So the goal is to, in the morning, post rates, and that'll be it. It'll be a short, it'll be maybe a minute or two long, just going over rates to give you that benchmark. And then twice a week, we're going to post videos that are really educational, explain programs to you. Buy versus rent, FHA versus conventional, FHA versus USDA. How do you get investor loans, and the whole mix of things to make sure you're educated, because our goal here is to educate and inform you guys everything real estate. So my name is Dan Frio. I do the rate update every day. We are now a federally chartered mortgage brokerage. So if you need our help anywhere in the country, please reach out to us. You can kind of contact us right up here, 844-775-5626, or schedule a meeting. That's what most people are doing between that and the chat button. That's how most people are reaching us. So God bless, guys. Thanks for watching. I'll see you this afternoon. Take care. Bye-bye.